known at my house. You're backstage at the Rise Up Morning Show. Welcome, welcome, welcome. The stream they don't want you to see. And by they, I mean StreamYard, whose APIs frown upon us this day. Let us know where you're tuning in from.
And all days.
All days. Every damn day. StreamYard, I guess, is kind of a dog in the streaming community. I'm hearing more and more people like, yeah, dude, StreamYard's light. It's basic. It doesn't work well with this pedal, my stream keys. So OBS is just a whiff away. There's Alex. Great. South of you and north of Alex. Right in the middle. Stuck in the middle. Okay. Oh, Alex. Guess what? Not only have we been little live, we've been big live for a whole entire minute, which means it's time for me to say Goodnow, Revolutionaries, and welcome to the Rise Up Morning Show. How? StreamYard? It's because I was talking shit about StreamYard. It's got to be.
All right, then.
At any rate, welcome. We're so glad you're here. This is your place for helpful crypto news, commentary, answers to your questions, and if you've got a question, if you've got a suggestion like, hey, buddy, try going live on time next time, or something else, be gentle. But
did I do that? No.
Right? You think Tori's playing a joke on us backstage? Tori? I don't know. Either way, we'll figure it out, and we will definitely have a more helpful approach to answering your questions. If you get too a little confused, or you have a question that you don't get a satisfactory answer to, then I do want to direct you to jump into the community at community.rumshq.com, where the only thing missing is you. We got a global community. It's a great place to get my attention, get Alex's attention. We aren't going to see the DMs, and we are not going to DM you. So get at us there. And yes, send me warm things, because the comments are right. Evan always so bundled up. I'm trying to get bundled. Oh, there it is for TikTok. Community.rumshq.com. The only thing missing is you.
And if you lop off that piece, the community from that URL, that is the show's official Beacons page. And the first, thank you. And the first link on it is a feedback form that it would really mean a lot to us if you could take a couple minutes and fill it out at some point when it's convenient for you. It's a few quick questions about how you feel about the show and how you feel about sponsored content and all that kind of stuff. And right there, honest feedback is the best feedback, and I would really appreciate it. So if you have 5 minutes, go there. First link is that survey, and that would be awesome.
Go there. First link. You do. Thank you. It would be awesome. We would appreciate it. Exit Velo says, no money for heat when there is XRP to buy.
No money for heat because bought XRP.
Hey. Possibly not true. Today on the show, we have teased that we will be doing a little crypto tax Q&A. I have got Koinly logged in and ready to go so you can see what a crypto tax dashboard looks like. Alex and I both live in the United States. You might live lots of other places in the world, which is, again, why we say to you, you should join a community so you can connect with somebody who's done crypto taxes before in your neck of the woods. We also want to go over a couple of headlines. There are a lot of different things happening in crypto land and the land. And of course, last night, Alex and I were filming Take 3 of our Jito tutorial. Take 3 part 2 of... Dude, the bloopers are going to go so hard. If I had $1 for every time I said Jico instead of Jito, I could buy at least 4 XRP.
Over and over.
But you found a new cool tool there yesterday, and
yes.
I kind of think that might be a good place to start. How do you feel about that?
Yeah, let's do it. It's really cool.
Let's do it. Okay, Alex, tell me, for people who want to play along, where do they need to go?
All right, so it's a protocol called Hylo, not sponsored. It's spelled HYLO.SO is the URL. It is there's going to be a couple pieces that sound kind of familiar if you've heard about this. It's a little bit more complicated of a DeFi play, but some pretty interesting APYs can be earned there. So we found it because I was poking around on Jito's dashboard, and shout out Jito for being the gateway to Solana DeFi. The only cataloged stablecoin play is on Hylo, and it's kind of interesting. So Hylo has two tokens. There's HYUSD, their stablecoin, and then there is SOL or xSOL, which functions kind of similarly to TurboSOL in that it is a tokenized, wrapped, leveraged long position. But the way that they protect against liquidation is different than the way that DeFi Carrot protects against liquidation. So the yield for the HYUSD stablecoin and xSOL are linked. These two tokens work together. And the yield from their stablecoin, which you earn yield just for holding, comes from the backing assets, which are all liquid staking tokens. So all of those things, mSOL, JitoSOL, bSOL, etc., they are all earning yield just by existing, because that's how those yields work, right? Every single one of them represents someone's stake on the Solana network. Mm-hmm. And doing that generates new SOL, which pay into the yield among some tips and some other fees that kind of all get rolled into this yield that stakers can earn. And then all of those staked, those LSTs, they together get combined and make up the total yield for this stablecoin, which is actually quite good. So you can you can keep compounding how much interest you're earning on these things by, doing one more thing with the asset you get and another thing with that asset, et cetera, et cetera. So then you can also, bear with me now, you can also stake the stablecoin HYUSD and turn it into SHYUSD, SHYUSD.
I love it.
Just, when in doubt, add another letter to your stablecoin.
Right.
What this does is it contributes the stablecoin that you are staking now into a stability pool, which is what protects xSOL holders from being liquidated. And so the cool part is that the staked version of HYUSD is actually not always stable. It purposely depegs and repegs as a mitigation tool to protect the leverage holders from being liquidated.
Kind of like a shock absorber, basically?
Yes, it's exactly like a shock absorber. They will depeg it on purpose, or I should say the algorithm depegs it on purpose. And the benefit to you, because you're holding this stable coin, in name only, this staked version of it, the interest that you can earn is way higher because you're getting paid extra to take that risk. Because while you can unstake your HYUSD whenever you want, if you do that during a time of shock absorption, that may not be in your best interest. So you kind of have to navigate, extreme market volatility, but they pay you quite well for it. And when I say quite well, I mean you're earning like 5 to 6% on the SOL that you're staking originally. Then you take that LST and you swap it for HYUSD, and immediately the stake or the interest is compounded by another however many percent. This thing earns like 11% when you're staking it.
Are you going to pull up the dashboard in a minute?
Yeah. I just wanted to explain it.
Yeah, the joke here is, so first of all, let me back up and say, if you are still wrestling with, maybe you saw or missed part 1 of Jito, that's going to teach you, first of all, it'll give you a list of the requisite skills you need to have before you do this. It will show you how to swap your SOL for JitoSOL by doing what is called liquid staking. It's like staking, but they give you a token as a receipt that you can do more things with. As Alex said, you're securing the Solana network, and then you can take this token and do other things with it. That's where we kind of left off part 2 of our tutorial last week, as we drove through a couple of those places. And the version we filmed yesterday, we went a little slower. We defined some more terms about what you could do with those tokens, but basically you can lend them, you can provide liquidity, create part of the pot of money that protocols like this are using to do other kinds of financial instruments and get paid for it. Anything a bank would do, and some extra things that only cryptocurrencies make possible, you can do. And the sum that we found last night that I really like is staking is a good citizen thing to do. It protects the network. And so imagine you are a citizen of a network And when you do good things for the network, you get rewarded in network tokens that you can use to then create more good things. It's a ladder, as Alex always says, where, yeah, it's a little complex. We were laughing about this last night because I was like, Alex, you just explain it to us, because people will see that even two guys like us who spend all our time here couldn't possibly understand like the math and weird financial mechanics behind it. But when you explain that, even though I am not a quant, I have enough of an understanding that, yeah, okay, so I'm creating a pool of money for people to do this leverage thing. I'm helping absorb the shock and they're paying me for it. Great, cool, wonderful. And I can check on, does the protocol have enough money in it to give me confidence? Is who developed it, that kind of thing. And as you often remind me, we don't have to put our whole net worth in this thing.
Correct.
This is just, we're learning. So if you need stronger coffee for an explanation like that, don't worry, you're not alone. Like, we're learning this together. I think seeing it might help a little bit because these interfaces do tend to look a lot alike. So talk me through it. This is Hylo.
Yeah, this is Hylo, HYLO. And yeah, no, I mean, I saw a couple comments about it, being over some heads. Listen, to be very honest with you, I discovered this yesterday. And we kind of, stumbled our way through it, got our first impression. I was pretty excited by how intuitive the experience was as a new user, someone who at least is aware that as I'm seeing a number of DeFi terms, like, okay, I know what that is. I know what this is. I understand the mechanics of what I'm doing. But like how the two pieces work together, in this case, actually three pieces, because they have two tokens, but one of them has a staked version. It's pretty sweet. And I would say that if you're interested in DeFi, this is one of those ways where all of a sudden you're taking the amount of interest that you're earning from 5% to like 25% by adding a few layers. And the requirement there being that you understand the layers that you're adding. And yes, we're going to go through it one more time. Don't worry. But I would encourage you, honestly, the way that I learned about this, the easiest is to just do it. Yeah. Literally, you can go from start to finish through this entire process for $10 if you wanted to experience what it is to, deposit a little bit, claim a little bit of this, do the thing, whatever. Stake a little tiny bit of SOL, take the liquid staking token that you got over here, swap it for the stablecoin, and then stake the stablecoin, or turn the stablecoin that you got into this leveraged position, which can then earn even more. So, which is then accruing interest on top of interest, on top of being a leveraged Solana long, meaning that if the price of SOL goes up, you can compound that even more. And I always think back to this question that Matt Wiley asked a while ago about JitoSOL and specifically was, hey, if I get this token and it's like a token that I can move around and do stuff with, can't I swing trade it and then turn in more of it that I originally received to unstake a bigger portion of SOL? And yes, absolutely. Because the only way that JitoSOL comes into existence is through the staking of Solana. So, the amount shared is the same, even if it's changing hands a little bit, which is kind of cool. So this is just one of those ways you can increase the amount that you have to unstake, which again adds another layer of yield that you can earn.
Yeah, so this is also why we're always saying you need to learn these like steps and get good at them. Over and over, you got to practice this stuff because you're going to be doing the swapping, the staking, the approving, the moving tokens. Everything you do in DeFi depends on you being able to do those kinds of things well. I'm sorry, Alex, go ahead.
No, and I want to highlight this comment from Black over on TikTok.
Yes.
We're just learning how much money the banks make by doing all of this.
Correct.
Yeah.
Correct.
Yes.
Exactly.
This is what they're doing in the background. They're just doing the same thing. And you get none of it. But the only reason they can do any of it is because you deposited there. So screw those guys. Am I right?
Yeah, and would you rather have 12 guys in a room saying, hey, I've got this crazy idea. I'm going to borrow money and go bet on a bunch of junk stocks. Can you create a reserve pool for me to like hedge against so I don't get liquidated? Like, do you want that happening? Or would you rather have a nice clean website where it's a little bit technical, but somebody explains it to you? You can see every other person who's investing in this thing, and you can choose at any time to swap your money in or out. They tell you how collateralized it is, which means how much are these stable coins backed by other assets. It is like super transparent. It couldn't be more transparent. And honestly, like you said about this website, it's actually pretty user friendly.
It's pretty cool.
Also, we have to ding Matt Wiley. He's in the comments. He heard his name, and we appreciate you. Summoned to the comments. Okay, so again, here's the familiar interface if you're a DeFi user. Yep. If you're not a DeFi user yet, this may look a little new to you, but go back, check out part 1 of our tutorial, and stay with us here. What am I looking at, Alex?
So this is going to look a little bit like a swap, like your standard swap interface. And what you're doing here effectively is swapping into, or in this case, minting their stablecoin, HYUSD. And I did it with JitoSOL because that is the one that I had. But as you can see, there are a lot of different things that you can use to trade into it. Couple different, so Jupiter's staking token, Hylo's itself. I don't know what plus is, but
Hylo Sol Plus. We were joking about that too. It's like, okay, HYUSD, ShyUSD, Shy Plus USD premiums. I was like,
Ultra Pro,
you know,
Ultra Pro Platinum USD Max. Wait, no, ETH Max was a thing, right? That was a scam from a while ago with Floyd Mayweather
ETH Max,
and Kim Kardashian.
not to be confused with Mega ETH, which was no Kim K. I think was promoting Mega ETH actually before it was legit.
Nope.
Are you sure?
Was ETH Max. I promise. Yeah, fact check me. It was ETH Max.
Okay, somebody bearded, help me out.
Don't come for me. That's the one. I'm pretty confident. Okay, so yeah. Anyway, there's other stuff you can do. There's JitoSOL there. You could just do straight USDC, Tether, Jupiter, etc. So, anyway, what you would do, and I don't have any right now because I already swapped it, but you can see right here, I have a little balance. We got like $45 of this stablecoin. And once you've done that, you can either just stop there because it naturally kind of earns some yield, or you can hop over here. And there's all these little options up here at the top. Evan, I don't know if that comes up.
Yeah, we can see it.
The leverage one would be like similar to TurboSOL. This would be xSOL. And currently that leverage amount is sitting at 3.13x. There's also an earn here. So, contributing it to this pool can earn you 10.77%. The collateral ratio currently, which does fluctuate but has a baseline, is currently 146.7%. Yesterday it was 151%, but the market has taken a nice little dump since then. So there's that. This is the overall, I think, what's this? This is the liquid staking position itself. HYLOSOL. So you can supply right here any of these things. Looks like you can restake Jupiter or JitoSOL or just stake regular Solana there. So there's a thing. Anyway, this was literally my first time using this whole deal. Immediately, I did clock that we are gaining XP up here. Usually, that to me indicates like the future potential of an airdrop. I'm aware that it could also just be they could have absolutely no plans to do that. It could just be accruing as kind of another like visual incentive to keep me here, because I like to see the number go up. So, be aware of that. I do not know. I don't have any idea whether or not they're actually doing an airdrop or anything like that. I just noticed even right here next to normal it says ++.
Oh my gosh.
So it's everywhere.
It's everywhere. And zoom out and scroll down. On every one of these pages, you may or may not have noticed, and if you're listening in podcast land, they have all these cute little FAQs. What is liquid staking? How do I receive staking rewards? And on the HYUSD page, it was like, where does the yield come from? Our LSTs. So, and you didn't show this, Alex, but when we first navigated to this site last night, what I really liked about it was it started with 3 buttons that said, what do you want to do? Do you want to leverage? Do you want to earn yield? Do you want to store your wealth in a secure asset? And it was like 3 very simple buttons. You didn't need to know anything about crypto at all to like come to this site and say, oh, that sounds like something I would be interested in. It was really clear. So shout out to the Hylo team for that too, because that was well done.
Yep. So honestly, I'm just for the sake of learning here, you know, the price of SOL could continue to go down, but just because I have some of this stablecoin, we're all gonna open a position together here. So I'm just gonna toss I'm gonna take you all with me. So the price of Solana, just to show you guys the contrast here, went from like 132, 133 down to 129. So it's down 3.8% on the day. And on the day, this leveraged position is down 11.7%. So first of all, that's a good little highlight that if you're participating in anything to do with leverage, because the gains can be amplified, just remember that your losses are also multiplied by the same amount.
Yeah.
So this is a leveraged long position, and it will go down faster than it will, than it would normally if you're just holding.
It's
the
more
asset.
volatile.
So just be aware of that.
It's SOL, but more volatile. SOL
Yes.
amplified.
But since it's down like this, I'm just gonna swap into it. I'm gonna
You YOLOing in?
Yep. Why not? We're gonna put this $45 in here. We'll swap it into this, and we'll see what happens. Yeah. There was a question: how long would you use this? How long would you leave this position in?
Great questions.
And the answer, actually, that is a really good question because it's not always the same. Normally, you might think to say like, oh, well, it's a DeFi position. Just, do whatever you're comfortable with. In some cases, it doesn't make sense to even begin it if you intend to stop very quickly or immediately. For example, providing liquidity is not something you would want to do for 5 minutes.
Or even lending,
or even lending. Yeah. Typically, what you want to be aware of is there am I going into another token here? Like, am I minting or redeeming a liquid staking token of some sort? Am I getting some sort of receipt token in return for whatever I'm doing? Like with supplying USDC to DeFi Carrot to get that interest rate, I'm getting CRT in return, and that's where the rewards accrue. Is there a fee associated with that? If so, what ROI do I need to achieve before I'm, net positive on the withdrawal? So like, and with with DeFi Carrot, for example, you'd want that to be above 0.5%. So as soon as you've hit an ROI of 1%, you've at least made a little something, and that would be it. But with this one, it's kind of more up to you. Like if I bought into this xSOL position that I just did, and the price of Solana, recovers 5%, meaning that I get 15% on this, I could sell and take the profit. I would come away up. So that one's kind of up to you. If you're participating with any of the leverage stuff, I would say it's better to be quick on the draw than to let it linger, depending on whatever, your personal goals and risk tolerance are. But with the stablecoin supply, I would just check and see what's the fee that I have to pay to do this, and what return do I need to make before I am in the positive to withdraw, and that would be the minimum.
Yeah,
I
the
found
basic
that,
math on it. Can I give you some basic math?
Yes, please.
Let's say you're doing 3.65% is the APY, okay? Because these products have different functions by which they pay you. The leverage token is like buying and holding Solana. You buy it low, and you hope it goes up. And because you're using leverage, if it goes up, your gains are multiplied. If the leverage is 3x and it goes up 10%, well, congratulations, you made 30%. Okay, that's how you pay yourself on that token. You buy that token when you're thinking Solana is cheap, it's going higher. You might hold it for a day because you're doing a quick swing trade. You might be holding it for 6 months because you think 6 months from now the macro picture will be bullish and this token won't get liquidated until then. You might choose to swap for this stablecoin or a liquid staking token also because you're bullish on Solana. If, like Alex said, I'm treating this, we said last night, you're treating this more like a savings bond than like a swing trade most of the time. Liquid staking token, just taking your SOL to JitoSOL, it's going to get 5 to 6% right now per year. So you would divide that by however many days there are in a year to figure out how much you're making per day. And then that is a more helpful metric, I think, to start assessing fees from. To say, okay, if I am making 0.005% a day, and I'm going to pay a 1% fee to withdraw, I need to hold it for however many days to break even. And I'm comfortable with that because I think SOL is going up in the long term. You know, if SOL was going down and you were going to lose your money, you might not park it there. You might put it in the stablecoin instead. So that's kind of how you start. Approach it like a board game. Just do a little basic math and ask yourself, as you look at the landscape, okay, what seems like the stablest or the highest growth potential or the longest term set it and forget it, whatever your goal is, place to park my money.
Mm-hmm.
What you looking at now?
This is just the DeFi Llama dashboard for Hylo. So Bearded is throwing in the YouTube comments over here. I just had them on the screen, the different findings for Hylo's audits. So appreciate you grabbing those. It's definitely smaller. Amount of TVL here under 100 million. It looks, based on the fact that TVL is that, which is obviously, a significant amount of money compared to, other bigger DeFi protocols on SOL, it's not that much. Lower end too, just because, what we're looking at here is a stablecoin and staking position play. So TVL is actually more important than it would be on something like a DEX. So that's good to note. Revenue seems decent for something this size. I don't know anything about them. I don't know how big their team is. I don't know anybody on this particular team. Like I said, we kind of found this yesterday, and I'm doing a $40 experiment with it, and I'll keep you guys posted on how it goes.
Alex,
yeah.
Can we also look, do they have a link to the smart contract for this pool or for any of the pools? But I want to answer a question from Matthew. He said, how old is this protocol? I see here that they've got income statements dating back to 2025. So I would assume that they were like Q2 2025 went live, but I'd like to see a smart contract to figure out like when was it deployed. We've talked before about how one of the measures of how secure something is how old the smart contract is and how much money is locked in it, because that's effectively a public pot of money that is saying, hey, bad guys, come get me. The older it is, the bigger it is, the more effective it has been at resisting that, presumably because it is written well and secure. So that's a very good question by Matthew, and I'm sure Alex is going to take it to the old Explorer just to see when it was launched or something.
Yeah,
are you you're still sharing Jito?
Yes, I did that on purpose.
Okay.
So this, if you look at the page on Jito where you would get like the original link out to whatever protocol it is, yes. I submitted a question to Jito earlier this morning just about what does it take to get on this aggregation of DeFi stuff. Like what does Jito conduct its own audit, or what kind of threshold needs to be met? Is everything? I haven't seen one that's not been audited, so perhaps that's the threshold. But I'll let you guys know what they say there. This is on
Jito Network, the screen we're on now. Jito.network. This is their dashboard.
Yeah, this is making me think that so the core smart contract code for Hylo is not public. It's not open source.
Oh, that's interesting.
And that actually, I think that came up in one of the audit flags that Bearded grabbed, right? Yeah, so they have, I know some of it is up. They do have a GitHub that people can look at, but I don't think it has everything. The actual smart contract source code is not there. They were audited by OtterSec. Doesn't mean that the code is public. It was a private review and audit. So that's another good thing to be aware of.
But you know what we could do, Alex? I could go into your wallet. I could look at the transaction history and see who you've interacted with and just really start poking around, take this or that wallet, this or that contract to the blockchain explorer. It'd probably take someone like you or me 30 minutes to have, a cloudy picture of approximately what this is like, find some of the contracts or whatever.
Yeah.
But we could do it.
Yeah, you could backtrace it.
And I would use GPT or Claude if I found on that's not Etherscan, SolScan. I probably could find the contract, more information about it, and could just copy it, paste it. We're not deeply technical. So, it would be easy to get the ingredients we needed to make a better assessment if that was something that concerned us. Like Alex said, we look at other indicators, though. The TVL, the fact that it's on Jito's DeFi dashboard page gives me some confidence. The fact that they've been sharing income statements, that they have an audit, I'd YOLO $50 into it to find out if it works or not.
Yeah, worth an experiment.
Yeah, very cool. Okay, so there will be follow-up questions coming here, and I see you've got your eyes on them. So let me also say to folks, if you're here today, you're learning DeFi for the first time and it seems over your head, go back to YouTube, check out part 1 of our, it's in the Web3 101 walkthroughs and tutorials playlist. I'm going to make a separate playlist called How to DeFi, so be on the lookout for that. Right now it's walkthroughs, Web3 101 walkthroughs and tutorials. But you can start to learn some of the skills to do this stuff. Hylo is I would say a level 2 or level 3 DeFi play, but it might take you from being somebody who knows how to buy, sell, send, receive, store your crypto securely and turn it back into cash, use a self-custody wallet. It will take you, I don't know, a week of study, 2 to 3 concentrated hours of practice that could be spread out over a month of time when you're just waiting to go to bed or sitting on the toilet or something like that. You know what I mean? Mm-hmm. You can do it. You can totally do it.
I know you had some tax stuff on your agenda this morning. There was a question about all of this. How is this yield taxed?
Oh, great question.
Is it as capital gains or is it something else? Generally, yield is taxed as income. So you would be tracking it and categorizing it as such. However, as we start to get a little bit more complicated in the ways that we're getting the yield, there's some nuance. If you are holding an asset and that asset's price is changing as a result of the yield accruing, like a liquid staking token or one of these wrapped tokenized leverage long positions, that would be capital gains, because in order to realize the yield that was paid into it, that changes the value of the token and you're swapping it then back into a different asset at a heightened valuation. So that would be a capital gain. It would not count as income the same way. I do believe, and I don't know this for sure, so someone who knows more about taxes fact check me, and I'm in the process of fact checking it myself, but my theory is that you could probably make a pretty compelling case with good documentation and, you know, a good transaction history and you know, like a statement about exactly what happened and what you did to justify, you know, one or the other. I would think. I think there's some gray area there. And, you know, for as many influencers as love to talk about how all we need is regulation, the only place we really need regulation in a big way is on the tax side, because it's a mess. And there's a lot of things that I think could stand to get a little bit cleaned up. You know, what the difference, the straight black and white difference between income and between capital gains is, and between, you know, when is it one versus the other? When do I, you know, some sort of logging system to prevent me from having to pay the, you know, different taxes on the same money more than once. Yeah. All that kind of stuff. There's a lot of tax problems with crypto, but that's a really good question.
Generally speaking, I'm going to start taking a point away every time I say that, and also largely. If you're playing bingo at home, there's a largely for you. The number one question I see, Alex, is do I need to report crypto on my taxes? And the answer, my friend, is absolutely yes. The IRS treats crypto like Bitcoin, like Ethereum, NFTs as property, not currency. So every transaction you engage in, whether that's selling, trading, earning yield, they have tax implications. There are exceptions. We'll get into them. Even if you just lost money, it's important to report this, because actually you could benefit from losing money in crypto. Finally, a way to gain when you lose. And it should be said that Alex and I are United States residents. We have been doing our crypto taxes here for several years. The laws are changing. We're not CPAs. And we really don't have any experience outside of our jurisdiction, though Alex has vibe coded a pretty great tax app, and we have answered a lot of questions about taxes for people who live in different places where it's within the bounds of our experience. So if we say, can't tell you, sorry, it's not because we don't want to help you. We'll help you get in touch with somebody who will have an answer. It's because we don't want to speak beyond our experience. Alex, there were a couple of interesting changes for crypto in 2025 I want to highlight really quick. Is that okay?
After I answer this question, just because
that's why I asked.
It's a good point. So Judy on TikTok says, yes, and the most you can write off is $3,000. Kinda. Important distinction with that $3,000 write-off. The $3,000 write-off limit this is for U.S. taxpayers, only relates to the amount that you can write off of your income taxes as it relates to capital gains. So if you lose money in a trade or on an investment and you declare that loss, meaning you've realized it, you're no longer just holding the asset. You bought Bitcoin, it's down, you sold it, you realized at least $3,000 in loss. You can declare that capital loss against your income to offset up to $3,000 of income. If you are offsetting capital gains, there is no limit. If Evan loses $100,000 on one trade and makes $100,000 on another, he owes no tax. He is even. It's net in both directions without a limit. The $3,000 limit only relates to using capital losses to offset your income tax obligation.
And you can carry that forward indefinitely.
And you can carry that forward. Yes, you can roll it over into the following year. If you have up to $3,000 in the year before, if you have up to 6 and you only use 3 this year, you can roll the next 3 over into the next year.
Yeah, it's very helpful like that.
This is why good documentation is so important.
Yeah, and we are going to get to some software solutions that make it easier, the way TurboTax or H&R Block make it simple to do your regular taxes. But for now, let me just say, starting in January last year, there were some pretty big and remain ongoing changes to cryptocurrency taxes. Somewhere I can hear our friend Jessica going, oh. So here's what you need to know. Every crypto exchange, if you're using Coinbase, if you're using Kraken, Binance, and even if you're not in the United States, you're using a different cryptocurrency exchange, but you live in the US, you're using a VPN, whatever, they must track your identity and your transactions. They report this using a form called the 1099-DA. This is specifically for digital assets, as the name implies. Look at this, Alex. I'm going big screen. Forget you, man. How? Prior to 2025, crypto investors, you could use a universal accounting method. This is like how you would calculate your cost basis. And now you have to use a wallet by wallet method instead. Don't worry if that's too technical. Essentially, it's important. One of the frustrations with crypto taxes is because these pieces of software don't necessarily talk to each other, it can be difficult to know where your tokens came from, what it cost you to get them. Coinbase doesn't necessarily see that you bought them on a wallet or an exchange. Sorry, Alex, I'm dancing with you over here. And so sometimes you have to manually add that kind of thing yourself. And I don't know, Alex, if somebody has been a crypto holder for 20, how old is Bitcoin now? If you've been a crypto holder for a long time, they're giving you a chance to catch up and be compliant and report things one time to account for it going forward, to list one cost basis. I forget what it's called. Do you remember this? The tax term for it. At any rate, the law is changing. I recommend you get not so much a crypto native accountant, because that would be very expensive. You don't need a trust. You don't need an LLC, but it would be helpful to find a crypto tax software so that you can pay taxes appropriately. Crypto, as I said, is treated as property, not currency, so you will pay, first of all, capital gains tax. If you buy Bitcoin for $15,000, you sell it for $20,000, then your taxable gain for the sale is $5,000. And this happens whenever you sell that crypto, whether it's in a wallet or an exchange. If you swap it, even immediately, for another token, I turn my Bitcoin into Ethereum. If it cost more at that time than it did when you bought it, that incurs a capital gain. Or if it costs less, a loss. You must report it. Making purchases with crypto also counts. If I buy Bitcoin or Ethereum or Solana or whatever, and I've got a crypto debit card, and I swipe it at the store, and Solana at the time of purchase is worth more than when I bought it, that also incurs a capital gains tax.
Notably,
yeah,
no cards work that way, because that would be insane because of that exact limitation. Typically, they work with just spending dollars against a position that you have. At least this is the way that they're starting to shift. I think back in the day, they used to work this way, and it was a disaster. At least I would never have touched them.
If you buy something directly with crypto and they don't have a middleware like that,
correct,
you're on the hook for it. And again, if you're using a tax software, Go ahead.
I wonder how it would be. I'm just thinking about people who like get paid for work in ETH or in SOL or something like that. I wonder.
The
I wonder if that
IRS
would
treats
change.
this the same as wages from a job. So taxes range from 10 to 37% on this. So
Interesting.
how much you should report, you got to figure out the fair market value of the assets in USD at the time you receive them. So if I pay you half an ETH for work, or you get it from staking or something, at the time you earn it, the price of one ETH, let's say it's $1,000. So in this case, you report $500 of income. Which is, again, why you should use a tax software. Because if you're connected to an exchange, that's how you get a debit card. And if you're connected to an exchange, they'll provide a nice, neat 1099 form that you can pop over into Koinly or Awaken to just generate a lot of this for you. Go ahead, brother.
So just in response to Edwin in the TikTok comments over here, who, according to the handle, is a CPA, throwing out
He always shows up at tax time, too. I see you, Edwin. Good to see you.
I appreciate it.
Yeah.
Good to see just a couple comments here. I know you're doing your best, limited by a pretty steep character limitation over here on TikTok, but I'm just going to highlight a couple of the things that Edwin has said here. Cost basis is calculated on a per wallet basis, and the default cost basis methodology is FIFO, first in, first out. As far as I know, you can elect a different one. In some cases, there is the default, just like you said. And that per wallet basis is, again, the default, but combining actions across different wallets is also allowed, but it does require some know-how to do that, and that's kind of one of the reasons that Awaken is so cool, because it makes it easier. The only thing I would push back on, and Edwin did end this by saying per se, if your crypto swaps or sales are from a centralized exchange, you don't need an accountant per se. And it's true that these exchanges will give you a tax report at the end of the year. They'll send one to you automatically. Robinhood does it, Coinbase does it, Kraken does it, whatever. You can download them. Even as I was just talking to my mom the other day about pulling or getting her report out of Coinbase, there are some irregularities there, and it kind of defaults to certain things, especially if you're going in and out of the exchange, and then things happen like on your own wallet outside of it, and then you go back to the exchange either just for the off ramp, or if you receive crypto like to your exchange account and you want that declared properly, it will like automatically set cost basis at 0 for crypto that it doesn't know where it came from, when perhaps it should be treated as income instead of a capital gain for selling it, that kind of a thing. Although another big problem with crypto taxes is that if you receive crypto for work, you owe income taxes on the dollar amount that crypto is worth the day you receive it. But then if you sell it a week later and it's gone up, you also owe capital gains tax on the amount that it increased by, which is horseshit. That's what I mean by like paying 2 taxes on the same amount of money. So just a note, it is still worth it, in my humble opinion, to double check the reporting that comes out of centralized exchanges, because they make some assumptions and some inferences, and it's obviously also all software based. So it is worth checking into, and you can send those you can upload those reports to different crypto tax software, or you could show them to a crypto literate tax accountant as well.
Edwin says HIFO or HAFO is questionable currently.
Interesting.
I gotta say, I do love the acronyms for taxes. LIFO, HIFO,
FIFO, LIFO, HAFO.
Fee, fi, fo, fum. Yeah, exactly. Bearded asks a really good question over here. Is it true you can subtract your gas and exchange fees from the taxable amount?
Yes.
Woo!
Yeah, fees are deductible, so keep track of them.
And again, your software will do this for you.
Yeah, and it's a little late for this part, but it is at this point still legal to wash trade in crypto, meaning that if you sell an asset, you can repurchase it with no time restrictions. In the stock world, there's a 30-day cool-off period to purchase similar assets after selling assets. In crypto, that does not exist. So oftentimes at the end of the year, you will see people who have a position that is currently in the red look to offset gains by quickly selling it and then rebuying it, so that at the end of that 2-transaction ordeal, they are in the same place that they were before, mostly. By in the same position, I mean that they have the same amount of money invested, they own the same amount of the asset in question, and they are still up or down the same amount. But on paper, they've declared a loss and then made a new investment. So that loss that they declared, that they made real with the sale, can be used to offset capital gains obligations for profitable positions. Now, what I mean by mostly is that it is worth noting and being aware of the fact that your cost basis has changed if you wash trade. So if you purchased Bitcoin at 90,000 and it goes down to 70,000 and you sell it and rebuy it, you have the same amount of money invested, you own the same amount of Bitcoin, you have realized and declared a tax-deductible capital loss, which you can use to offset income and capital gains, but your cost basis is now not 90,000 anymore, it is now 70,000, and if Bitcoin returns to 90,000, you owe capital gains on that difference. Whereas had you just held through and it returned to 90,000, you would not have a tax obligation. You would be at your break-even point, and there would not be an extra. So that is worth noting. That's the trade-off that you'd have to make.
Bearded also, with the assist for donations, you can write off crypto donations, just like other donations, up to 30% of AGI, your adjusted gross income, without paying capital gains tax. And I can't remember if I said this, so permit me to maybe repeat myself. There are several crypto transactions that are not taxable. If you're buying crypto, if all you do is buy and hold, you don't sell it, you don't, or you transfer it to wallets you own, you don't even need to check the box on the tax form. Like, that's fine. You're legally compliant. If you buy crypto with US dollars, with fiat, with a balance you move from your bank, with a credit card, debit card, transferring crypto between wallets you own, holding it, giving it as a gift within limits, or donating it to a qualified nonprofit, no need to report whatsoever. I also had a screen up on YouTube that I want to refer to, which is airdrops. This is a lot like staking, and they had a really good example. I'm going to put this website I'm screen sharing from, Gordon Law, how to report your crypto taxes, into the RUMS community so people can see it. They said, airdrop crypto is considered ordinary income based on the fair market value at the time of receipt. Noticing a pattern here? They say, conservatively, we recommend you treat airdropped NFTs or utility tokens the same way. Ben has a CyberKongz NFT. Hi, Ben. He receives 10 banana tokens every day just for holding it. The utility is fire and the art is dope. Ben needs to figure out how much each deposit was worth based on the value of banana tokens at the time of receipt and treat each airdrop as a taxable event. Again, the software will do it for you.
Yep.
CyberKongz. Ben is an OG.
Good job,
What do we
Ben.
got?
Good distinction by Mama B Thing on TikTok is the difference between holding terms and short-term versus long-term capital gains rates. So
yes.
The rate of capital gains depends on your personal tax situation. You can check it on the IRS website. They republish the guidelines and the brackets every year. So just look up, the current tax year that you're about to pay for or you're in the middle of, and you'll be able to see, based on your income and all that good stuff, which capital gains bracket you fall into. This is a good point to highlight because I often see it misrepresented that it's, always really high. And it's true that short-term capital gains, meaning the capital gains tax that you owe on an asset that you've held for under 1 year versus long-term, a year or longer, is higher. Short-term always owes more than long-term. You're incentivized to keep assets for longer. In crypto, that's not always a good idea. So you're kind of weighing the pros and cons between paying a higher rate of tax on a win that you realize sooner versus the risk of holding some of these assets, which are not good long-term investments, often longer than a year. That's another risk that you're taking. So I personally would rather pay taxes on a win than just keep writing off more and more losses. So that's usually the direction that I go. But again, it depends on the asset. They're all case by case for me. It's worth noting that even though it is true that short-term is higher than long-term, oftentimes I think that most people would be surprised at what their capital gains rate obligation actually is. And it is worth looking it up on the IRS's website because I always see crazy high percentages represented on social media when people are using it to scare people into holding shit for longer than they really want to by making them terrified of taxes. They usually opt into the percentage for capital gains on like really high income tax brackets, and most people actually maybe even don't owe any. There are tax brackets where you don't owe capital gains tax. It's low, obviously. But then, you know, even most people, I would say a good standard average, certainly me, my rate is not that high. You know, I don't earn very much money. My capital gains rate is probably a lot lower than you might think if you've never looked.
Shh, don't tell them. We're changing it this year. We're moving up a tax bracket, man.
It's true. Yes, that's the plan this year. I'm manifesting it.
Alex, there's a really good question that came in from Bearded about whether or not you're able to deduct costs like Koinly or Coinbase One.
Yeah.
And generally, I think it depends on your identity. If you're a miner or something like that, if you're us and you like work in crypto, we get paid in crypto a lot. We do most of our business in crypto. The answer is yes. Most of the time, as an individual, the IRS, at least till now, has treated staking, DeFi, airdrops, even if you like make a living doing this, as a hobby. I think, however, that you and your accountant can probably make a pretty compelling case that those are business expenses like gas fees. Do you have a firmer line on that?
I was answering questions. I have no idea what you just asked me.
I said, who's the most handsome Rise Up Morning Show host, and why is it me?
Oh, Will.
I know, right? Oh, man.
Hey there, normies.
Wherever he is.
That's why we make him take vacation. So that...
It's like reducing exposure to the sun. You know, you got to put on your sunscreen after a while. Otherwise, you'd be blinded.
Yeah, I'm not trying to get Icarus.
Clip it. There's also a really good point here about, I just want to emphasize, and Jessica, Edwin, everybody watching this in the future who has some expertise and like credentials, what I'm hearing is this Form 1099-DA that exchanges are going to be using for the first time, like this month, this year, is going to make it a lot easier for the IRS to start auditing cryptocurrency users. Until now, I don't think they've had a tool this effective or this comply with it, or we will be really upset at you. So please do report your crypto. Please don't just wing it, especially if you're using some sort of centralized exchange like Coinbase, like Kraken, like Crypto.com. It's like trying to be anonymous over the internet at Starbucks. You're not going to do it. You know? Alex, other specific question and answers, or is now a good time for me to quickly switch over and show some Koinly and just what this kind of software looks like?
Yeah, there's a couple. So to be very honest with you, as soon as we start to get into like the more complicated DeFi stuff, like I said, you know, the short answer is that there's a lot of nuance there. Someone like Edwin or Jessica would be better to ask specific questions about that. So, you know, if you guys are able to concisely answer any of these questions inside of TikTok comments, I applaud you. If you guys want to pop over to the YouTube stream and type in a longer one, we can toss it up on screen over there as well. And then shout out to any CPAs that feel like lingering in the community.rumshq.com and giving people quick little tidbit answers to tax questions. Pretty cool.
We will host a workshop, a seminar, and Joe requests an after dark.
Yes.
With tax experts. So I think we can make all those things happen. We'll have Andrew back on for sure. Maybe do a little drive-through of Awaken. And I do want to let you know that you can support the show by heading over to rumshq.com. And after you fill out that form, you know, the form that Tori worked up that Alex was like really, really adamant about, that's going to help us. But then help yourself. Go to the recommended tools and deals tab and get this link. Andrew is sprinkling a little extra on top for Awaken users who sign up and then reach out to him and say, hey, I heard about you on Rise Up. Their goal is basically to put Koinly and other crypto tax softwares out of business. And honestly, I feel he is pretty committed at it and also likely to achieve it.
Yeah. Sorry, a couple of comments here. So I don't know how this 1099 form thing is going to work for each token. It would have to be in only very specific situations. It's a nightmarishly stupid idea, and it's one of those tactics that's designed to choke DeFi because it's quite literally impossible to do that. You can't 1099 people through a DEX. that's not KYCing. You need, otherwise, who are you sending the form to? Or what are you putting on the form? It's pointless. So I don't know. And that's been like the looming threat for the past couple of years. And every single time it happens, it just gets punted to the following year. So I guess we'll see what happens. But I can't even begin to imagine that being a thing. I don't think it would work. There was a question about, I lost it, about tax obligations for loans if you're borrowing and lending. There we go, from Black. Loans in DeFi, what about those? So generally not a tax obligation if you are borrowing. However, again, the nuance is that it really depends on the nature or the structure of the borrowing and lending that you are participating in. Oftentimes the way that is happening is, you're borrowing against something and then doing something else with that yield, which opens you up to a different tax obligation. Sometimes it includes a swap. Swaps are still generally taxable events. Like Edwin says, it kind of depends on your personal business structure too. There's different ways to do it. There's way too much nuance to give a short answer to that one. And I am not the professional that would be able to answer it anyway. So I would say for those specific questions, you kind of need to look up your specific situation. And that would probably be where it'd be worth either engaging an accountant specifically, just because everyone's situation is a little different.
How about a Koinly drive-through?
Sure. Yeah, go for it. And Edwin says DeFi is exempt from the 1099 DA reporting for now. So yeah, I think exempt for now is probably an interesting way of phrasing this is impossible to enforce, so we're not going to do it. And again, the options are either change the nature of DeFi to not DeFi or don't do it, because you simply can't. So the burden is on the individual. Again, it's not in your best interest to avoid taxes, because really depending on how you're doing it, I think what's really going to be interesting is exactly how this open money stack idea works. I think that will change the nature of compliance in DeFi, because in theory one could put money on chain and never have to remove it, which will change the nature of on and off ramping in general. But we're getting several years down the line here. I don't know. The simple answer is you can't 1099 people who use DeFi, actual DeFi. If you're KYCing when you do the thing, then yeah, for sure. Easy peasy.
Yeah. It's interesting. It's the future. It's Koinly.io. This show is not sponsored by Koinly, but it could be. Alex, can you assist me with the screen share?
Yes.
Take your time. I have used Koinly the last several years to do my crypto taxes. I know Alex has too. Other tax websites, of course, our friends at Awaken.tax, but also you might use Coin Tracker, Coin Stats. As you can see here, I have just updated my portfolio, but I'm here to tell you this is not accurate. I have to go through and do some stuff. I want to show you how this works. You create an account with your email and password. And from there, you are prompted to connect your wallets. This is read-only access. Often you do this by copying and pasting the wallet addresses, or by going to the exchanges you use and generating a secure encrypted key. It's an API connection so that they can read the different kinds of transactions that have happened on your account. If you've connected once before, you don't need to connect again, usually. You can just go over here. They often have a button like sync where they just kind of query. Sometimes the connections get broken. You need to reestablish them. And something worth noting is, at least in Koinly, if I have a wallet like Trust that is multi-chain, I have to go into that wallet and get every network address it supports that I have tokens on. If I hold tokens on the Solana network, on the BNB network, on ETH, on Bitcoin, inside that wallet, I will have 4 different addresses that I will need to load into this software so it can accurately track and report on all my taxes. If that's beyond you or above your head, boy, you should jump in the community, because we've got lots of great resources that'll help you understand how cryptocurrency tokens can live on many different networks and how they work together. But once you've reported all your different addresses, wow, Alex, remember this? Yoroi, blast from the past?
Yes, annoying.
Terra Classic, Luna wallet, my Polkadot wallet. 3 transactions from 4 years ago. The old Elrond wallet, A lot of these are very old and don't matter anymore. But once you've connected all your wallets, that's really like probably the most tedious part. It will give you a sort of overview here, and you can see your transactions for a given time frame. I am going to ask it to show me transactions for all of 2025 because that is what I'm going to be reporting my taxes based on. And it shows you a little bit about your portfolio. Again, this is not quite accurate. I need to get some new information from Coinbase and some other places. I definitely paid more than $4 in trading fees, but it gives you like a snapshot. You can see a number of different things about how much went in, how much came out, how much income you made, how many expenses there were, your realized gains over this period, and a summary of like, this is what I paid to buy crypto this year, and this is what I came out with.
Yikes.
Yeah, it's gross. I actually think I did better than that. But then you can see a summary of all the different holdings, your balance. You can click into this to find out where did it come from, where did it go, yada, yada, yada. But what you want is you'll want to go to transactions. A lot of these will report your transactions for a given year. And you can see how it is categorizing all the different transactions that have happened for you. You can go through and recategorize these if they're wrong. Oh, this wasn't a deposit. It was actually a reward or an airdrop, or maybe they classed it as income, but it was really not income. Maybe Alex was paying me back for an expense I took on behalf of our company. You got to keep good notes. This part usually takes me, I don't know, Alex, probably an hour or two. And I would liken it to if you are a self-employed or W-2 person and you have some business expenses on like your credit cards or debit cards, and you got to go through your Visa statement one by one by one. It's kind of like that. It can be a little cumbersome, but it's usually not difficult. And then they can generate a report for you. They'll tell you if there's any kind of review needed. It'll let you change your settings based on where you are from. Koinly, for example, is compliant with many different countries. You see my cost basis is here. And then I can generate all kinds of forms that I might need for my tax professional friend or my tax software, TurboTax Export, for example. That's what I tend to use. I imagine Awaken is going to be similar to this. They'll have customer support. They'll have documents to help you. Alex, I'm going to kill the screen share. But there is a little manual effort required. Don't have to be a CPA, don't have to be an expert. And unfortunately, I don't have a good recommendation for somebody. Alex, I know we do have some friends who are accountants and crypto tax professionals, but I don't know anybody like H&R Block or TurboTax, aside from our friends at Awaken and friends at Koinly, who are doing this kind of thing at scale. Awaken actually has a service where for $5,000 a year, they'll do your bookkeeping and then file your taxes for you. So we see you doing that work.
So a couple points here that I just wanted to highlight. So Chris M is asking a couple questions about cold storage and the necessity to connect cold wallets to tax platforms. So again, it kind of depends. If your cold storage device and that wallet is a wallet that you use deposit only and you toss a little Bitcoin in there once a month and that's what you're doing with it, you're storing it, there's no need to do anything there. You do not owe any taxes on any of it until you sell it. If you're using any of the onboard trading platforms and trading options inside of some wallets, you're swapping on Ledger Live or whatever, then yep, you're incurring tax obligations the same way that you would be on any other wallet. It's just a cold wallet instead. So in that sense, same difference. And again, the access that you are granting to a tax platform like Koinly or Awaken as you connect these wallets is read-only. It's using that to gather information about transactions that you have completed. It's not signing things on your behalf or doing stuff or transmitting whatever. It's a read-only thing. But it's important to make sure that you trust the platform you're connecting to, because like I said, that means as much as you can throw out if it's a platform no one's ever audited or heard of. If you are then selling back out of a cold storage device to an exchange like Coinbase, if you on-ramped on Coinbase and you're off-ramping on Coinbase, then Coinbase is going to generate the tax report for you based on your account activity. You would intake that account activity, and if there are problems or whatever, you can address them then separately, but again, there shouldn't be a need to involve anything else if you were like storing it in the meantime in a different place and then moved it back over there, because the cost basis when you purchased it on Coinbase originally and the gains or loss obligation or declaration as you sell it, all is contained on the platform itself. Good questions.
Yeah, very good questions. Alex, I feel like that's good enough for now. I know there are always more tax questions, but we wanted to hit a couple of headlines on the way out the door. Does it sound like a good idea to pivot? And then if you have more, leave them in the community. You feel good about that?
Let's do it.
Let's do it. Alex has got the headlines, and I have got a resource I want to share. But first, you know, man, I got to hit a little
rapid fire crypto news.
I do love it. What headlines are we watching?
Now, bear with me because this is Will's department, but he's slacking, so we're gonna pick up the slack. So I think, you know, some of the stuff on everyone's mind, at least mine, is probably the fact that, you know, what's going on? Am I buying stuff now? Am I, you know, waiting for a steeper drop? So the newly and freshly escalating trade Tiff, whatever the hell we're doing now.
It's like a tariff, but it's a trade tiff.
It, you know, fighting with allies. That is causing the uncertainty and the instability and the volatility in the market right now. You know, coupled with the timing and the fact that it's overall, you know, sketchy out there. This makes it sketchier. This has, you know, ripple effects all around the world, obviously. So that's what you can attribute some of the downside to here. The fact that that's, you know, continuing to escalate. It doesn't seem to have any sign of cooling down right now. I'm sure that, I don't know, if I'm being pessimistic and cynical about it, which is probably the way to go, we're going to get some arbitrary like reprieve or fix when things have crashed enough and the right people have opened longs and the right stuff and cashed out their shorts and blah, blah, blah. So, you know, the market is actively being manipulated, and it's just such a beautiful thing that we all get to watch. Jobs data is still softening, not completely collapsing. Unemployment went down to 4.4% amid expectations of 4.5. There are still revisions coming through for previous months. The mixed picture for all this is starting to look like it's probably killing the chance of the Fed cutting rates this month. The markets are pricing a 97% probability that we're going to hold right where we're at. On top of that, let's see what else. I don't know. This is, I mean, that's about like where I'm at right now. I'd be curious if we'll text Will and get him to drop an update in the circle after this if he's got anything else specific that he's tracking. But you know, in general, the overall picture is that we're kind of still risk off this week. Tariff threats continue. The whole Japanese bond turmoil thing is definitely still ongoing. Sticky inflation is colliding with all of that uncertainty. You know, the U.S. economy is showing some resilience for sure, but it's, you know, momentum is slowing down. Fed is cautious. You know, China's record trade surplus is also throwing in some turmoil into this whole thing, causing confusion and chaos, of course. And then right now, again, I don't know. I've felt extremely just about the entire macro picture for well over a year now. I don't feel like confident one way or the other. It's so hard to tell. There's such a split and a divergence between like some of the data that you're getting that seems good and optimistic. Other data is terrible. Some data is terrifying. The rest of it is like, it's hard to trust. We keep getting all of these conflicting reports from different people who are upset with numbers and impressed by those numbers. And so all of a sudden the bad ones get changed and good, whatever. Like, I don't know. It's becoming harder and harder to trust what it is that you're reading and watching. It makes it very hard to make up your mind. And I think all of that squished together just makes markets uncertain. Markets hate uncertainty. It's more likely to be volatile to the downside. Everyone's jittery and on edge. You know, we're dancing on a knife edge here. So if you are looking at assets that you have a very long-term conviction in, it could be an interesting time to be paying attention to consistently better entries. Personally, I am keeping on with my exact same swing trade strategy. I'm not doing any charting because I can't. It's not a skill I have. I'm very reactive. Markets drop 5, 6, 10% or something like that in a day. I'm interested in buying something. If I see a 10 or 15% swing in anything, I'm very interested in selling. My time frame is usually a weekish, 2 weeks, kind of depends. But don't be scared to take profits if you find yourself up on stuff, and keep an eye on the assets that you love and have long-term faith in, because it's definitely possible we see steeper discounts.
I have a couple of other headlines here. Shout out to Bearded for the assist in the comments.
Sweet.
Thank you for that. There was this freeze of, one of the questions we often ask is, how decentralized is crypto? And this story really gets to the heart of it. I'm going to just put Bearded's comment right up here on the screen. And if you search for this on any news site, Yahoo's got a report on it. CoinDesk has got a report on it that Tether has frozen $182 million in USDT in the largest ever such crackdown by a stablecoin issuer. This is across 5 Tron wallets. Tron is the most popular network for moving the world's most popular stablecoin, USDT. This happened on January 11th, and it occurred amid Venezuela's heavy reliance on USDT. They use it for oil trade. They also, I learned recently, even have stablecoins pegged to the price of barrels of oil. How innovative is that as a way to get around embargoes and sanctions? So this is really a significant example of not your contract, not your crypto. It highlights that USDT is both a lifeline for people like Venezuelans who are facing hyperinflation, yet it's also a tool for compliance with powerful authorities targeting illicit flows. So USDT, USDC, all the stablecoins you know and love, for the most part, that the world relies on, have these kinds of crackdown and clawback mechanisms. If you are found to be doing something they don't like, they can put a pause and take your money. DAI is one example of a stablecoin that does not do that, although there are validators, there is consensus, and if the network decided they wanted to roll back or fork or do something like that, they could. This is programmable money. What's your take on that, Alex?
It's not the first time. It won't be the last time. They have done this before. This goes back years. I never see like it. We're highlighting this story as if it's like a unique and the first time anything's happened. And I don't know, that's a misrepresentation. Tether is a company. They are constantly under fire for compliance and, just sketchy shit. This makes perfect sense. I would expect to continue to see this. It's a company. Tether is not a decentralized thing. It's a company. It's a stablecoin issued by a company, Tether. So I don't know. I don't really care. To be honest, like, not to say that these kinds of things are not important or I'm not like tracking them, but like this doesn't bother me. I don't care. It's not the first time. No one's cared for years that Tether freezes money. They're not the only ones that do it. It's kind of the nature of like running a money business. You have to comply with something. Otherwise you're just going to get, regulated out of existence. Yeah, I don't know. It's exhausting.
It's exhausting. I do think it's important to keep our eyes on. And I also saw a really killer story I wanted to share, which is that the New York Stock Exchange, who is on the board of super validators for Canton Network, is preparing for blockchain trading for all stocks. They are going to tokenize. They're tokenizing everything, okay? They're preparing to launch a whole new platform for this. U.S. stocks and ETFs. Pending regulatory approval, the move would make it possible for all your favorite crypto features to now be possible for stocks. Instant settlement, 24/7 trading. And, that's a pretty big deal for ICE, Intercontinental Exchange, not that ICE. They are taking it mainstream. I think that's very cool. And one last thing, speaking of mainstream, Coinbase CEO Brian Armstrong has been in Davos for the World Economic Forum, and they had a big announcement about bringing Bermuda's entire economy on chain. They're going to do everything. The issuance of money, the collection of debts and taxes, legal tender, whatever. It's happening on chain. I think details are forthcoming, but Support from Coinbase, definitely. Support from Circle. They've talked about issuing government stablecoins and tokenizing other major national and civic assets to help lower costs and expand global financial access. Pretty cool. My final headline before I give you a resource for headlines is to say I did think that this particular quote was interesting. This is maybe a little old news, but there was a really a stark quote that came from President Trump. He said this to the Norwegian Prime Minister. He said, "Considering your country decided not to give me the Nobel Peace Prize, I no longer feel an obligation to think purely of peace regarding Greenland and possibly taking it over." And then, Alex, last night, I thought it was AI when I first saw it, but around 1 a.m., the President of the United States posted this AI-generated image to Truth Social and Twitter. And I just want to say, somebody take this man's ChatGPT account back. Come on now. Hashtag not political, but
if you want to talk about things that would really...
You gonna start a war, man?
That would really throw a wrench in anybody's plans of investment. Dissolving NATO by annexing a friendly territory that belongs to one of our NATO allies would be a pretty good way to do that.
Okay, I promised I'd give you a resource.
Shit. Like...
Don't have an ulcer, man. I'm right there with you. I promised I'd give you a resource, and this is important because if you don't think you're propagandized by the news, I have something else to tell you. You, especially as a citizen of the Western world, if you have a phone and access to the internet and are watching lots of TikTok streams and buying and selling cryptocurrency and worried about capital gains, you almost certainly are a target of lots and lots and lots of propaganda every single day, all the time, about everything. And it's very concerning for our friends on TikTok, especially, that ownership is being transferred to individuals who run companies that have a powerful vested interest in tracking you and shaping what you believe. So I want to highlight a resource from a good friend of ours. This is Himu Rahman, shout out Himu, the founder of Interval.news. He knows that algorithmic suppression is a problem, that independent reporting is in peril, and that we don't have many options to support it. So check out Interval. They've got an app now live in the App Store and Google Play. Interval.news, the headlines you're missing. And boy, if this is not a website designed by that brilliant mind of product, Himu Rahman, look at that font. Look at all that white space. Come on, Himu. I see you. Your aesthetic out here. Did I tell that story of the time I met him in New York and the coffee shop we were in with like its wood and white walls and like, boxy shirted employees and plants? Yeah. I was like, this is exactly the place Himu would want to meet for coffee. It was peaceful.
He is such a vibe.
He's such a vibe. And I really am so glad that the work he's doing is taking off. It's been really delightful to see. So go support him over at Interval News. And if you want to support us, don't forget you can fill out that form at rumshq.com to give some feedback for our sponsors, and you can use our link to register for Awaken to do your crypto taxes this year. Alex, it's about that time. We got to think about riding our dogs and ponies into the sunset. I got to go get phlebotomied. Before we do, have we got any final thoughts from the audience? Any questions you want to answer? Anything that we need to talk about or address? Before you absolutely die on a hill?
There was a question about private, like one-on-one consultations with us. Yes, it's possible. It is not the cheapest thing because it's not a very easy thing to scale. I always recommend that if that is something that you think you might be interested in, that it's definitely worth checking out the free circle. If you just have a couple questions that you'd like to get some more in-depth answers on, that's a great place to toss them in completely for free, and then kind of use that to determine whether or not you want to, escalate the whole thing to a full coaching session.
Yep.
Definitely possible, but I find that, oftentimes people just have a couple quick questions, and it's nothing wrong with using the free resources that we have first, especially because sketchy times out there.
Big time.
So,
sketch.
Yeah, community.rumshq.com, totally free to join and ask whatever you want.
Yeah, we have a tab right at the top that says coaching. You can sign up. You can get a free premium trial. And the coaching, I'll just tell you, it's $399. It's 90 minutes. We record the video. We take thorough notes. So all you got to do is sit back, relax, and tell us what's troubling you. We have steps to follow up. We link you personally to the community. And then if you sign up for a premium trial, that's the rub. We give you $100 off every coaching session. We try to make it as accessible as possible for everybody everywhere. Like Alex says, I've never had a bad review. I've never had somebody say, well, that was crap, which I would tell you anyway, even if I was a grifter. But you can verify that in the community. People will tell you it was worth it, it wasn't worth it. And usually I find what Alex says is true. I often think people just want to know us personally and have like some care. And then they're like, oh, great. And now I'm in the community and now I'm part of it. And Evan and Alex know me and, whatever. It's great. It's fun. But definitely check out the free stuff. My last thought on the way out the door is come back here tomorrow. We are going to have the continuation of our How to DeFi on Jito and in the Solana DeFi ecosystem with head of governance at Jito. Oh, Alex has got me. Thank you very much. Thank you very much, Dr. Nick Almond. He is the head of governance over at Jito. And his Twitter bio says, PhD in physics, learning theorist, governance designer, chief scientist, Factory Labs. And the background of his Twitter profile is a bunch of math equations with a text that says, "Milady, nice job, nerd. You actually read the white paper." This is exactly the kind of guy I would want to be, the head of governance at a complex like math product, financial product, DeFi protocol. So I really can't wait to talk to him. Alex found him and reached out, built a relationship. We're excited to continue that here. Thank you, Dr. Almond, and thank you, everybody, for being the very best part of what we do. If you missed the first part of the show, if you didn't get the links, then check out the podcast recording. Go to Rums HQ. Wherever you are, whenever you listen, you can listen to a recording on your favorite social. You can leave us a comment. You can find the links to the community, and then you can come back and we can do it all again. So thank you. Thank you for being the very best part of what we do. Alex, are you dual screening me?
Yeah, because I'm waiting for you to final thought me.
Final thought. Oh, I gave you a final thought. That was it. What do you want for your final thought?
I need another one. Okay, so plugs, free to join, free to ask questions. Do it. If you guys could be so kind, there are two cool things that you can do now that the show is ending. One would be to hop over here and bookmark it if you don't have time, but at some point when you have 5 or 10 minutes or so, we just put a survey there. It would be so unbelievably helpful if you guys could fill it out, just with your thoughts about the show, how you feel about watching the show, how you feel about sponsored content specifically. I am working on collecting new data and information to demonstrate to companies like the ones that we work with and the ones that we hope to work with why working with shows in this format is better, and why this is a better, healthier, more educational way to do marketing and messaging inside of crypto, as opposed to just paying out the ass for crappy shill videos that you don't like watching and we don't like making, and we honestly refuse to make. And then,
yes,
I think Chelsea's live. So Bullish Babe Chelsea does a morning show that starts right as ours is ending. And since Will is not here to do any TA stuff, I know she's doing it. So quick shout out, friend of the show. She does good work and has a killer live show.
Good last words. Exavella says, consider it done.
Thank you.
Thank you very much, and thank you very much. We'll be back tomorrow, same time, same place. Until then, everybody, stay safe, be well. My friends, rise up.